Imagine you're walking into the biggest library in the world, thousands of books. If someone simply says, "Go pick a book," where do you even start? Do you pick fiction, science, history, business, children's book? You first need categories. The same thing happens with the mutual funds. There isn't just one mutual fund, there are hundreds, even thousands of schemes. Without knowing their categories, choosing one becomes confusing. So, in this video, let's understand how mutual funds are classified. Welcome to your own channel, Romance with Finance, a brand of Financial Freedom Hub. On this channel, you get the videos and information related to personal finance.
Love to read books? Go and grab this book on mutual funds. Click on the below link and grab your copy today.
In the previous video, we discussed that different mutual funds earn returns from different sources. Some invest in stocks, some invest in bonds, some invest in gold, some invest in international markets, some combine multiple asset classes. However, this is only one way of classifying mutual funds. In reality, mutual funds are classified in multiple ways. Let's understand them one by one. The first and most important classification is based on where the money is invested. This gives us categories like equity mutual funds, debt mutual funds, gold mutual funds, international mutual funds, real estate mutual funds, hybrid mutual funds. Think of these as different vehicles. Each vehicle is built for a different road. Each has its own risk, return, and purpose. We'll study every one of these in detail in the coming videos. Now, suppose there are two mutual funds and both are investing in stocks. Does that automatically make them identical? Not at all, because what matters isn't just what they invest in, however, how they invest. Some mutual funds invest only in one industry, like banking, technology, or healthcare sector. These are known as sectoral funds. Other might invest around a broader investment idea or long-term trend. For example, artificial intelligence, electric vehicles, manufacturing, infrastructure, etc. These funds invest in a particular theme and are therefore categorized as thematic funds. Now, if you have been following our earlier videos on this channel, you will remember that while learning how to pick stocks, we discussed market capitalization and we also discussed how it helps us to diversify our portfolio. In those videos, we have already learned that companies are broadly classified as large cap, mid cap, and small cap based on their market capitalization. The same concept also applies to mutual funds. A mutual fund isn't classified by its own size. Instead, it's classified by the companies it primarily invests in, that is, its underlying portfolio. This underlying portfolio is also known as asset allocation. If the underlying portfolio of a particular mutual fund, that is, its asset allocation, mainly consists of large cap companies, then that particular mutual fund is called large cap fund. If the asset allocation of a particular mutual fund has the exposure more towards mid cap companies, then it's called a mid cap fund. Similarly, if the most of the underlying portfolio is made up of small cap companies, then it is known as a small cap fund. Along with that, there is also another category of a mutual fund which is known as multi-cap fund or flexi-cap fund. You will also come across such kind of funds. These funds invest across various companies of different market capitalization. Some mutual funds allow you to invest or redeem your money on any business day. These are called open ended funds. Others allow investments only during a specific period or they have certain restrictions. These are called close-ended funds. Sometimes the classification isn't about what the fund buy, it's about why the fund exists. Some funds aim for long-term wealth creation, some aim for regular income, some aim to save tax, some simply try to match a market index. Each objective creates a different category of mutual funds. So remember, mutual funds are not classified in just one way. They can be classified by the assets they invest in, by the investment strategy, by the size of companies they buy, by how investments are made, or by the objective they are trying to achieve. Think of it like classifying cars. You can classify them by fuel type, by size, by purpose, or by brand. The same car can belong to multiple categories at the same time. Similarly, one mutual fund can be an equity fund, a large cap fund, an open ended fund, and an index fund all at once. Different classifications answer different questions. In this video, our goal wasn't to master every type of mutual fund. It was to understand the map. Because once you know the map, the journey becomes easier. In the next video, we will begin with the largest and most popular category, that is equity mutual funds. And we'll try to understand how they work, why they have the potential to generate higher returns, and the risk associated with the equity mutual funds. If you found this video useful, then